Ladies and gentlemen, I want to start this video by looking at the macro scenario for Bitcoin and the S&P 500 because I think the S&P 500 and Bitcoin are very much going hand in hand right now. There's been some interesting things going on with the S&P and traditional markets in general, and then I'm going to dive into the shorter term for Bitcoin, plotting out a fresh short-term chart to give you a full-scale, fresh idea and a fresh look about what's going on with Bitcoin in the short term. So let's get into that. Right. Starting out with macro, I'll keep it short. We've got the S&P 500 here. It's been in a vicious upwards trend since around October 2022, which is around when Bitcoin bottomed out as well. We can very much easily see that if we just overlay the Bitcoin chart onto the S&P 500 chart, we can see that Bitcoin, let's go ahead and make it an adequate scale here. We can see very easily that Bitcoin and the S&P move pretty much hand in hand. This is to be expected when you have a very good market environment financially. You have people investing in assets, and those assets can be traditional assets or Bitcoin. And of course, when there is a good environment to invest in assets, both those assets are going to move relatively similar. Now, obviously, there's deviations. Like, for example, throughout the entirety of, basically the entirety of 2023 was a large deviation. Now, you might look at this chart at a glance and think, oh, how can you say that? Because they both went upwards. Well, you look at the actual moves themselves. Bitcoin, for example, was going downwards to its new low while the S&P was pumping up 30%. Bitcoin was going sideways for 8 months while the S&P 500 was pumping up like 20%, which is a very large amount. And then when Bitcoin finally skyrocketed, it did it a few weeks in advance, and the S&P took a while to catch up. But for the most part, since around November 2023, that correlation has returned. So throughout 2023, we had a very low correlation between S&P and Bitcoin. They were kind of doing their own thing to a certain extent, especially on shorter and medium-term timeframes. But right now, ever since around October, S&P found its bottom, Bitcoin found its bottom, and now they've been acting very much hand in hand. You can see that's especially true at this recent top. Orange is obviously Bitcoin, and the candles obviously the S&P 500, and they've both had this kind of rounding top formation. And what we actually see is that, you know, the short-term correlation between S&P and Bitcoin have been very much skyrocketing, and the S&P right now has taken the focus of financial market investors because Jerome Powell, the Federal Reserve, recently came out and said they might need to delay the rate cuts, and so we've seen the S&P take a bit of a dive because people were expecting the rate cuts to occur sooner than they are now expected, and so the S&P's kind of divin down a bit, and that's kind of supported this Bitcoin drop as well, and so there is speculation that kind of says until the S&P finds a definitive bottom, Bitcoin won't either, and that kind of throws the macro question into question, I guess it should say, again, right? So the big bear case right now, and it has been for a long period of time, and I've always viciously disagreed with it. I've always thought it's ridiculous, and I still do, but I'll address it today, is that the S&P is somehow going to drag down Bitcoin to new lows, and that this entire pump on both the S&P and on Bitcoin is just a scam. It's a fake pump, and that Bitcoin is just seeing this massive overvaluation. It's going to drop downwards, and the whole market's going to crash, right? That's kind of the bear case. Because yes, of course, if S&P and traditional markets in general do have a massive bear market, it does leave Bitcoin exposed to a very high probability of doing the same thing. Okay, we've never really seen Bitcoin completely deviate from traditional markets, right? We've never seen a period of time where Bitcoin has, for an extended period of time, gone upwards massively while the S&P has gone downwards massively. We just haven't seen that before. They've always gone hand in hand to a certain extent. There's been large, medium-term, short-term deviations, but nothing really lasting, a year or more, nothing like that. So, yeah, the bear case right now is that the S&P is going to drop, and it's going to drag down Bitcoin. Now, I just don't see the evidence of that whatsoever. I don't see the evidence that the S&P 500 will drop, is what I'm saying. And I'll tell you why. The main argument is that interest rates, when they start dropping, that will drag down the S&P. And that argument is based in some truth, because if we look, for example, at the screen right now, the blue line on this screen is the S&P 500, and the orange line on the screen is interest rates. Now, historically, we've only ever found S&P 500 bottoms when interest rates have been dropping. So we look, for example, in the 1970s, the S&P 500 found its bottom while interest rates were dropping. The same was true over here in the dot-com bubble, okay? It's only when interest rates started dropping that the S&P 500 started dropping downwards, and it's only when interest rates were pretty much almost done declining that the S&P found its bottom. Same thing in 2009, global financial crisis, 2008, I should say. S&P 500 found its bottom when interest rates were dropping. Same story even here in 2019 during this smaller bear market, right? interest rates started dropping. This is during 2020 as well. And only when interest rates started dropping is when S&P 500 found its bottom. So it's been a historical trend. It's very much a true thing that S&P 500 and traditional markets only really find their bear market bottoms when interest rates are in the process of dropping. And so now, of course, we're in a market environment where interest rates have been risen quite rapidly and they're flatlining and they're expected to start dropping this year. And so a lot of people are saying that when interest rates start dropping, the S&P 500 will go downwards into a bear market, right? Now, I just don't see this as a very well-supported claim, and I'll tell you why. Okay, first piece of data, and I've discussed this many times in the past, right? This is all recapping information here. That the main thing is that we have never seen, okay, a market environment before in which the S&P 500 was going downwards like it was in 2022, and the Federal Reserve decided to raise interest rates. That is the first time the Federal Reserve has ever raised interest rates, ever, while the market was going downwards in a bear market, okay? Because we have seen that deviation, that first time ever in the entire history of this chart, that the Federal Reserve raised interest rates in a bear market, how do we know what's going to happen next, right? We have a completely new set of data here, a completely new market environment. We've never seen this before. Never, ever seen this before. And then people are looking at the historical data like it means anything. If we have a new set of characteristics, we cannot look at the data, which was relevant only when the old set of characteristics was in play. A completely new set of characteristics here. Even looking at short-term evidence, we can see that when Jerome Powell came out and said there might be delays on the rate cuts, what did the market do, guys? The market dropped downwards, okay? Now, if rate cuts were bearish, which is what the bears are saying right now, rate cuts are bearish, they're going to drag the market down. When Jerome Powell came out and said a couple of weeks ago that there's going to be a delay on rate cuts, the market should have gone up, but instead the market went down. That is indicating that rate cuts are actually bullish for traditional markets and will create an even better market environment for markets to rise, okay? So I just don't see the argument at all at this point in time that rate cuts will drag down traditional markets in the S&P. We'll have to wait and see. I don't think it's a valid thing at all to look at the historical trends, because the historical trends are not relevant to our completely new characteristic, which is that we saw Federal Reserve raising interest rates in a bear market. It's just a completely new market environment. We've never seen it before. And so the historical data, quite frankly, means nothing. And especially with this short-term evidence as well, that, you know, the Jerome Powell coming out and saying we're going to see delays on rate cuts and the market dropping because of that instead of pumping. I think that's very much adequate evidence to believe that no, actually rate cuts won't be bad for traditional markets. It might actually be good. And at the very worst, we don't really know what it's going to do. So it's not really worth stressing about it. We should just wait and see. I've discussed that so many times in the past, and I've got many other arguments to make about it. I've made them all. In fact, I'll probably link a video in the description. I did about a 25-minute analysis on this a few weeks ago or a month ago, so you can check it out if you want my full analysis and breakdown. But those are the main points there. So just bear in mind right now, although the S&P is very closely tied to Bitcoin, especially in the last few months, there's no real evidence to suggest that S&P will enter a bear market, and hence there's no real evidence to suggest that Bitcoin will enter a bear market either. Bitcoin's macro is very, very strong from both a charting perspective and from an S&P perspective. Guys, when I say S&P, I obviously am meaning traditional markets. I'm just addicted to saying the word S&P. Okay, cool. Now that we've covered that, we can move into short term. Okay, quick little short-term update, guys. We'll start with a fresh chart here. Monthly chart, okay? We're going to use the lines, the support levels for the monthly chart and the weekly chart, add them to the shorter-term chart to give you an idea about what's going on here in the short term, okay? So, very important monthly candle level here at 61.3k. You can see that's the level we rejected from in 2021. It's the highest ever monthly candle close we saw in October 2021 bull market, and also rejection zone here in January 2024. If we go ahead and draw in that pink line on the 4-hourly chart, okay, so 61.3k around that price region. Let's just do 61.3. There it is. We'll make that line pink. That is the monthly candle level presented on the 4-hourly chart. You can see that that level is pretty much the neckline for this entire price region, right? That is the level we have bounced off every single time we've tested it. Very, very strong level. It's what's dividing the market right now between a bullish price region and a bearish price region right below it, at least on short term. So that is our lifeline here. Moving into the weekly chart, what we see is the 69k level. Okay, you see in yellow here, this 69k level. That is the all-time high from 2021, and it's also a level that acted as a very strong resistance zone on weekly candle close, and a very strong support zone on weekly candle closes as well as of recent. So we'll go ahead and draw that line in on the 4-hourly chart at 69k. All right, there it is right there in yellow. So that is a very important zone as well, because that's basically what's dividing the range itself. So we have this entire range, right? We have the all-time high here in red, okay? We have the bottom of the range here in pink, and we have the middle of the range here in yellow, right? Right now, we're on the lower half of the range. We've seen a nice little bouncing structure that's promising, but it's not enough, okay? In order to break back into a comfortable position, we need to be breaking back into the upper part of the range and breaking above 69k. Right now, we are facing some headwinds coming from, as you can see on the volume profile, a bit of a spike in the volume profile here around that 66 to 67k level. Ultimately, to get out of those headwinds, we need to be crushing 69k, and you can see that downslope really starts to begin there. It only gets easier once we're above 69k. This is why I've said over and over again, guys, that until, and this is in recent videos, I've said this over and over again, until Bitcoin gets back above 69k, we're still in danger of going down lower. If we did go down lower, where would we go? Very easy to find out. Just go to the weekly chart, go to the volume profile, look where the next spike in the volume profile is. It's around 57k. So therefore, if Bitcoin was to drop downwards further, below 61k, the next stop for Bitcoin would be around 57k, right? So very simple on the short-term charts right now. We're still in danger. We're not out of the woods yet. The trend is not looking that good at the moment. If Bitcoin does manage to get back above that 69k level, we will be salvaging a lot, and we will be getting out of that danger zone. But right now, still not out of the woods. We need to be watching it very, very closely. It is promising to see another bounce from this price region. We'll have to see how it goes. So guys, thank you for watching. I hope you enjoyed the video today. Please go ahead and check out the BingX and BitGet exchanges. Guys, BingX is a global exchange, non-KYC. And BitGet is global for everyone except for people in the USA. So take your pick. They're both exceptional exchanges. I've advertised BitGet for about 2.5 years in this channel, or 2 years in this channel, and BingX I've done for about 6, 7, or 8 months. Both very good. I've handpicked them myself. My referral links are down below. You can get 15% trading fee discounts on both of these exchanges, and you can also get access to exclusive reward centers on both these exchanges with my referral links for thousands of US dollars in rewards. So check them out with my referral links down below. Check out the Crypto Academy's bull market sale as well if you want to learn how to trade. That's where you can do it. It's an educational course teaching you how to trade, made in collaboration with me and Megawell Crypto. And then finally, the VIP group on Telegram. It's where we trade altcoins 3 to 4 times a week. We've got a 77.5% win rate with 18 months of trading results, fully transparent there in a PDF for you to see. And if you like those results, you like what you see, you can always join that group. So check it out. Guys, thanks for watching. Hope you enjoyed. I'll catch you tomorrow.